Sonia, and a warm welcome back, especially if you were at the last webinar where we talked about some of the fundamentals on residential real estate pricing and some of the trends there. So, as Sonia mentioned, today we're going to be talking about affordable housing, and this one often stirs sentiment because it's very topical at the moment, especially we've got the new government who's keen on building, over 1 million homes. And a large proportion of them are likely going to be aimed at first-time buyers. And a lot of first-time buyers sometimes struggle with gaining access to that first property. And this is where affordable housing comes into play. It may be purchasing a property, or it may be not even to purchase and just to live, i.e. to rent a property, and that's where affordable housing comes in. So if we have a look at some of the dynamics of affordable housing, these are the 4 kind of key categories that we have on the left, and these are our types of affordable housing. So we'll start with the top left, which is our social rent. So often when you see social rent, sometimes we call this kind of rent restructuring now as a more common term. And it's often run by housing associations and local authorities that care significantly about social rent. It's not as popular as, say, affordable rent is now, but it's something that's becoming, has been mainstream in the past. And what we're looking at is with social rent is often the rent is being calculated based on the number of bedrooms and sometimes the average earnings in the area. And tenants often maybe on benefits, say, and they'll be able to apply for these type of houses, which are, like I say, majority owned by local authorities, i.e. your local council area, especially within the UK, I should add. And they're going to value, how many bedrooms is there, what's the average earnings in the area, and that's what the rent will roughly be. So especially in the north of the UK, you'll find these rents to be significantly cheaper, often up to 40 to 50% cheaper than private market rents in that area. People often get confused between social rent and affordable rent, and they are different. The reason why is affordable rent is based on the private market rental value of that building. So social rent is based on the house characteristics, where affordable rent is going to be based on the private market rent, and often it's stipulated at 80%. So you can rent out that building, say it's £1,000 in the private rental market, you're only going to be able to charge £800 through affordable rent. So what you will find normally is that social rent will be lower or cheaper than affordable rent, and affordable rent will be cheaper than the private market rental sector. Now, affordable rent kind of came into the mainstream in the UK in about 2011, and that's when the Conservative government kind of introduced this term of what they call affordable. Obviously, one of the caps on this is how affordable is affordable rent. Because if private market rents, and we've seen them go up, maybe 10 to 12% per year over the last 2-3 years, well, these private market rents have gone significantly higher. And then is affordable rent actually affordable? And there's a raging debate still about this, and it's hard to know, but that's just to make you aware. Another thing that we can look at is rent to buy. Now, these kind of structures are done over, generally speaking, 5 years, can be as low as 2, but generally between 2 and 5 years. And what's going to happen is you're going to rent your property over a period of time, and then you will have the option to buy that building back. Often you'll have the option in anywhere between years 2, 3, 4, or 5, and each owner will have a stipulation on this. Often the kickback on this, so you'll rent it for a period of time, and then you'll get given 25% of the rent that you've paid to the landlord back. And often they'll put stipulations if the house price has gone up in that period of time, you may get a kickback on that, so up to 50% of the increase in any value at the point you moved in to the point you want to purchase may be given back to you. So this is a good way for people who don't have that deposit to be able to rent a property and to be able to buy it in the future. There is, generally speaking, stringent requirements for you to enter into one of these rent to buys. They're going to be looking at your credit score. They're going to look at having references from previous maybe landlords to make sure that you're going to look after the building. They're going to look at your earnings to see, can you afford it? And so this is quite a new way of doing it, becoming more popular. Of course, remember, if you rent it and then decide not to buy it, then of course you gain none of the upside there. The final one, which is highly popular at the moment, is our starter home / discounted sales. And often these are going to sell at maybe 20 to up to 50% off the market value. These are generally seen as very, very favourable, and often people who don't know much about real estate will often see these significantly cheaper than the other houses in the area and often will want to buy them. You've got to be very careful with these because often sometimes you might have shared ownership, which is another route that you could go down. And there's a lot of caveats and covenants is what we would use on these contracts. And covenants, by what I mean by that, is that there's restrictions. Kind of restrictive covenants is what we call it. So the restrictions on what you can do. And so often this might be that you cannot rent out the building. Or you might not be able to do a holiday let. I actually spoke to one of these yesterday from Vats one in Cumbria. And they said to me, you're not allowed to rent out the building, you're not allowed to sublet it, and you can only own up to 80% of that property. And you have to rent the other percentage of the building from them. And that rent can go up by the RPI index, so the retail price index, which goes up every year. And also it's on a leasehold, so it's not a freehold building. The other restrictive covenant, which shocked me actually, is you have to apply for any changes, and they were very strict on this, of any changes to the exterior. So even if you wanted to build a shed in your own garden, which most people would assume is it's not a building of any type, so you can put this up. It's not a permanent structure, and most people will put a shed up, but you can't in these. You have to get permission. And they have the right to reject it. So, do you want them type of restrictions when you're buying your first house? Some people want that first home, fair enough. But of course, these restrictions need to be, you need to be careful with them, with the leaseholds, with the rental values, because you can quickly find that you might struggle to sell these type of buildings in the future if the market isn't strong. So they're the main types of affordable housing that you may see in the market. And we have different measures of affordability. And the number one here is kind of the key one that most people focus on. You'll often see this in the news, and that's house price to earnings ratio or house price to income. To give you some idea of the historical stats on house price to earnings, and these are CPI adjusted, I wrote some down. In 1983, the house price to income, so how much more the house is to every to the average income in that period of time, was 3.5. So if we see this number going higher, it generally means less affordability, right? The house price has gone up and income hasn't followed it in terms of that ratio. So in 1983, it was 3.5. In 1993, it went down to 3. So houses were more affordable in 1993 compared to 1983. In 2003, it went to 5. In 2013, it remained at 5. And then in 2023, it went up to 7. So if we compare from 1983 to last year, housing affordability has got twice as bad. So that number's gone up from 3.5 to 7. So as you can see, this number can vary across the time periods. And I should note that's for the UK market, them numbers. But we just have to be careful. So what's that showing us? House prices have gone up, income growth has gone, has been quite stagnant. We've only seen it go up recently in the last year with the wage growth. Of course, that's part of the big inflation discussion that we see on the market at the moment or on the news. Another one that some people care about is the housing expenditure to earnings. So we're looking at how much we spend in terms of how much on the mortgage and on the property related to our earnings. Often the house price to income is generally a better indicator because expenditure is you can pick and choose how you manage your expenditure. So you can cut expenditure if you need to. Point 3 is our residual income left for housing, and that's looking at after we pay all our bills, how much money is left from our average income or from our income to pay for housing. May that be rent, mortgage payments, any other bills that might be associated with the house. So some measures will be used for residual income. Point 4 is housing supply measures. So often you can look at the ONS data from the UK government, or the Federal Reserve often publishes data for US about how many houses are being built, and we can look at what's the lag on that. So we've seen how the number of house building going up over the last few years. Of course, that's stimulated by the higher house prices. With the recent turmoil in house prices, where it went down slightly, and higher interest rates, we're seeing a little bit of a lag now come in there, so house building may go down. Again, the new government are looking to change that. Ooh. And then the final one is we can look at housing affordability indexes. So if you're into your academic research, you can look at affordability index, where we look at the affordability across time and we index that to a certain level. So a common one is the MIT housing index that looks at housing affordability in the US. So let's have a look at our ownership of real estate. So here we can see from points 1 to 7 on the left-hand side, these are the type of people who are investing into affordable accommodation. Housing associations is very common. Remember, some of these are structured as potentially not-for-profit. Sometimes they are for profit, but these large housing associations can invest considerable sums and can get considerable grants from the local government to help purchase the land, to get favourable planning breaks. And so we sometimes see housing associations are quite large into this area. Some for-profit registered providers will sometimes own affordable housing. Something to be aware of is in the UK, when you're doing a new development, a certain proportion of the new development needs to come under affordable housing. Often it's stipulated at 25%. So 25% of the properties, let's say 100 new developments you're building, will need to be affordable. Now, sometimes housing developers don't like to do affordable housing. They actually just care about generating the most amount of money and want the highest house prices, or maybe there's a theme in that area. They don't want affordable housing. Sometimes there's negative connotations. So what they can do is pay the council to build affordable housing elsewhere, and then they can just build housing all of a certain type. Of course, is that an inclusive community? Then potentially not. But potentially for profit registered providers can do this, where they pay the council maybe a couple of £1 million, and the council will then have to build the affordable housing elsewhere. So that's something to be aware of. Otherwise, if they believe the price that the council have set on that number of houses that they need to pay to not build, they have to build them, and that'll be part of their planning requirements. The government is one of the biggest kind of leading areas now on affordable housing. We've seen pension insurance firms. Remember, these long investment time horizons, often 30 years, 40 years. So sometimes these affordable housing can be seen as safe investments that have always been needed over the last 30 or 40 years so far. And so there's going to be strong demand for them moving forward. Private individuals could buy affordable housing. Not as common, if I'm honest. It's quite hard to get into yourself. Generally, a part of a larger business will be doing this, but you can speak to your local council and they will tell you the requirements, and they will give you favourable planning permission if you promise to build affordable housing. If it's help to buy, what have you. Of course, if you're an individual, I'd be very careful without doing all the financial modelling if you were to go into that area. REITs, or real estate investment trusts, have significant portfolios of affordable housing, and non-profit organisations too. So we can see it's quite a diverse group of people who are investing into these areas. Remember, often these will have strong backing by the local authority and the government. Often they may pay directly, not even the tenant. They'll pay the owner directly the rent. So again, it's lower risk. And sometimes they will even cover any bills that's associated with the renovation after a tenant leaves, they damage. So often you'll find you might have a lower return, but much lower risk than you'll find in the private rented market. And so this is why, if you're a first-time buyer, these can be quite cheap compared to the regular market. If we look on the right-hand side, as I mentioned just on the bottom there, we've got some of our incentives. Of course, these are inflation linked, so affordable housing, if it's affordable rent, is linked to the private market rent, so that's inflation linked often. Social rent, not so much. So just be careful if you're going into a social rent contract. ESG is very big at the moment, of course. So some of these pension insurance funds who want to listen to the people who are contributing into the pension who have ESG focus may think that actually this is a good way of owning rental properties compared to the private market sector, i.e. they're helping tenants out through this affordable housing. So it might meet some of their social and governance criteria, not really the environmental, but social and governance criteria in particular. Sometimes they want to just shift in terms of their allocation of their portfolio into residential from potentially commercial, and affordable housing might be a safer option, as mentioned with the previous risks. And some may just want exposure to the real estate market. If we can see in terms of the type of housing over the last few years, it's quite hard to pick up recent data on affordable housing. We can see that the number of providers is going up year on year, and this is primarily targeted at low-cost home ownership. So this is the idea of discounted sales, and again, due to government grants or covenants on that, so it'll be affordable for the foreseeable future. If we have a look at some examples of affordable housing, the top two are some recent examples from this year. So we've got Haringey Council and PA Housing. If you just notice, both of these are what we call forward commitments. So both the council, i.e. the local authority, and this housing association have done a forward commitment. And this is the idea that they're buying from a developer either a mixed tenure affordable housing portfolio in the case of PA Housing, or social rent apartments for the local authority. And what that means is that they're going to get a discount on the purchase price. Often they'll do phases where they give the developer money so they can draw down on the money as and when they complete that development project. And over time, the reason they do this, they can get these buildings for a cheaper rate. So it's more discounted because they're taking on the funding risk to be able to fund them developments. Developers are happy to do this, and often they're happy to take less of a profit, partly because then they don't have the funding risk of trying to make sure that they get the maximum market rent or price, and they know that that money's there when they come and complete each stage. So if we look, we can see that the Haringey Council was doing social rent apartments, I believe in London. So they were buying them at 282,000 per property. It's unclear exactly how far through the development of them they are, but they paid 29.4 million for them. PA Housing, more for profit here, paid 21 million, but again, these were for affordable mixed tenure buildings in London. If we look at the Cornwall Pension Fund, they actually allocate 5% of their pension towards social impact. So this comes back to the ESG point that I mentioned to you before. And so £65 million of that pension fund has gone towards affordable housing. And so that's part of their mantra. Of course, the question that as a pension holder you may have for your pension provider is, that's great that you're doing ESG and putting that as part of the portfolio, but does that sit with your personal asset allocation and your personal beliefs? Yes, it's good to invest in affordable housing, but actually, if it's not generating the returns that you need for retirement, then maybe that's the wrong pension provider for you. So as an investor, you've got to look at your own ESG kind of beliefs, and also what the investment firm, in this case Cornwall Pension Fund, is also doing. And if we look at Hester, we can see in Australia a significant sum of money has been raised, about 500 million Australian dollars, to go into social housing in I believe Sydney. So we can see that affordable housing is across the world. It's not just UK based, but it is everywhere. But notice that again, purchasing buildings is kind of the main process, because the management of social rents and affordable rents can be quite time consuming, and a lot of legalities that you can quickly come foul of. And that's why sometimes people don't do them. So let's have a look at the future of affordable housing. So if we can see on the left-hand side here, we can see in terms of social rent is not very big. If we look at the current period, affordable rent is much more significant in terms of the type of affordable housing that is being completed. We can see ownership in terms of shared and other ownership structures. But notice social rent has got significantly gone down over time, partly because of the dwindling stock of local authority buildings that long-term tenants have had the option to buy. We're seeing a lot more commercial real estate sites, especially with the new government with the brown sites, or what they call ugly sites of land. They're turning these into affordable towns and cities. The question is who is owning that extra percentage? And is that what we want, that all these houses are affordable and they don't own all of the building? That does raise some questions. Are they going to forever be paying a certain percent on their property as rent? We're seeing more support and more financing to support the development, and also they care about the EPC requirements of these affordable housing. The idea is not only we're providing affordable rents and purchase prices, but the tenants who, or the owners who move into them, can they actually live economically as well? So making sure that they've got high EPC requirements, i.e. A, B or C, is becoming a significant mantra for any new builds, especially. They need to be at least a B generally to be able to get purchasing. We're seeing that the affordable housing is coming towards city centres, because what we've found in the past is that a lot of these sites have been being pushed away from the central business districts because of the price point, and therefore are we actually causing zones of poverty, so to say, or where people who don't have much money all live in one area? Quite controversial. And so actually, do you end up with just the rich living in the centre and then poorer people living further away? So that's why they're trying to change that. That's why I put the example before with the council buying in the closer to the city centre, is this idea that actually affordable housing should be mixed with the high prices as well, high price areas. We're seeing more demand, and also this is really impacting younger generations. And go back to that house price to income ratio that I mentioned before, 7 times is what it is at the moment. So it's much harder to buy a property today than it was back in 1983. The real wage increases is, to be honest, is probably the easiest way to solve this issue. If we see higher wage growth, that would be the best way of not needing to do affordable housing and going back to regular home ownership. But until we see that wage growth, affordable housing is the main solution that we have in today's market. Like I say, pension and insurance funds, mainly pension funds, are putting significant sums of money into this arena. So that's where we're seeing who's driving this, because of their long ownership and investment time horizons. So hopefully you've gained an insight into what affordable housing is, kind of what's going on in the market, and how the ownership structure is looking. Happy to